Good morning, everybody. Let's start with the hot news today. Chelsea have sacked their manager just after spending about 260 million in transfers. Morning, Kay. Morning, Stel.
Good morning, Ryan.
Morning, guys. Who was the manager?
I'm done.
Thomas Tuchel.
Okay.
What a sad news. But this being said, now Chelsea can buy Lukaku back.
Yeah, doubt it.
Or Zola. They should get Zola back.
Yeah, I like Zola.
He was a good
once
player.
as our manager for about 10 minutes.
Yeah.
I'd like Zola too. Yeah.
Yeah, no chance.
All right, that's show done. Thanks, everybody.
Yeah, that's it. Your football news, hot off the press. Yeah, Gavin, as a West Ham supporter, I take great pleasure in the what happens over that side of London. So I could swear, but I won't. No, yeah, I will. Fuck them. Anyway, let's get stuck into it. Another day, another big figure or two for dollar yen.
By the way, Brian, before you continue, when I lived in London, I used to be a member at the Chelsea club, which was inside Stamford Bridge. It was a really nice gym and everything. And I remember going, when after finishing the session, all that, there's a really nice lounge area, and it was like Mourinho and the players and all that. And man, those guys, they have this attitude. I mean, it's incredible. All the footballers, they think they are gods. Right, it's incredible. Anyway, I just wanted to mention that, and I was actually mistaken once for Alex. Remember the Brazilian player, Alex?
Yeah,
I was mistaken. Somebody came up to me and goes, "Oh, your autograph, Alex." I'm not. And no, I'm not Alex.
See, that's when you go, yeah, give me something to sign, and you sign your name on it.
Yeah, that was really funny.
Yeah. Anyway, so now I know you like Chelsea. I'm banning you from all future flow shows.
I don't like Chelsea. I just used to live really close to there, to Stamford Bridge.
Right. I'll let you off. Right, let's get into it before we spend the whole show talking about football, which I could do quite easily. Right, on to where should we start? Let's start with our old faves in China. Not any huge news, but the PBOC fixed at 6.9160 last night versus an expected 6.9686. The prior fix was 6.9096, so only sort of 60 pip, 70 pip uptick on the fix on that one now. As you can see, we are now well up and knocking on the 7 door. As you can see there, we've had close to 2 attempts now around sort of the mid 6.99s. Looks to be a bit of defence. I haven't heard of such as yet, but I would suspect maybe we've got a barrier up there. It's going to be a big psychological level anyway. I know Kay's in it, and I've got into a trade this morning, which those in the trading room will have seen in our trade room. So we're knocking up against the big 7 level. This could be a bit of a moment for one weakness, whether the China's going to let it go through, continue this soft weakening bias, or if it's just going to take it out and blow it completely. So we'll see what happens there. It's a big figure. I like trading big figures, and this is one of the big ones. So got to have a crack at that. And Kay's looking to offload some, I believe, up there as well, aren't you, mate?
You could say we're knocking on 7's door. Oh my God, I can't believe
Yeah,
I said that.
Get out.
Heaven. Seventh heaven. For those in Japan, knowing Roppongi in Tokyo, they know what 7th heaven is.
7's a fairly big number over there, isn't it?
Sorry?
7's a big number.
7 is a really big number over there, indeed. And well, I mean, the numbers have more to do, are more important in China, I think. But yeah, Japan is not shy on their 7s, 8s, and things.
Yeah, 8 is the lucky number across most
is
of
the
Asia,
lucky number. Yeah, they're paying fortunes in China to have license plates with 8s on.
Yeah, exactly. So anyway, we're up there knocking on that door, as still politely mentioned. Back to the yen, Japanese yen, and you know, we've had this another big shift up overnight. I got burnt on another snipe, shorting into 144 just before I left the desk yesterday. Really tight stop, 143.15. Sorry, 143 I shorted at. See, I mean, even I'm getting my big figures confused. With a stop at 143.15, which got burnt overnight. So I've had a couple of snipes now. I'm not doing any size trades. Trying to trade the big figures in dollar yen last night. Trying to trade the breaks in euro dollar under 99 twice. I've got burnt on those. So I'm going to sit on my hands for a bit because we're creeping into volatility that's the wrong sort of volatility. If you get what I mean, there's good volatility and bad volatility, and right now I think we're seeing bad volatility. Lots of people trying to maybe pick tops, pick bottoms, you know, particularly in dollar yen, and coming unstuck. So if I have a few trades like that, small trades, and they don't work, I'm going to start sitting on my hands and letting the market do its thing and sort itself out. But the moves look relentless. We've had more comments out from Japanese ministers, Suzuki and Cabinet Secretary Matsuno, pretty much sticking to the same thing, which has perhaps helped the moves because they've not really stepped up the rhetoric hugely. There's been a couple of additional comments, so it's been the usual watching with a high sense of urgency. Moves are looking one-sided, they're mentioning. The only real uptick in rhetoric is that they're both saying that they're ready to take appropriate action if necessary, and will need to take action if these moves continue. But even so, the market's sticking two fingers up at those comments. So I think we're getting to the point where the market's saying, right, come on, what you got? And I think we're on for further moves higher. We did also get an ex-Ministry of Finance official, Watanabe, who came out saying that there's no need for intervention in the yen. When you're not in the hot seat, as Kay mentioned in the chat room, it's easy to say anything you like, different when you are. Now, speaking of intervention, Suzuki was asked, you know, what would intervention be like, and he wouldn't be drawn on what action they would take. So it's still a bit airy-fairy. They're not going to obviously tip their hand to the market initially. As we know, the usual playbook is to maybe start doing a phone around, checking rates, as it's called. That spreads the rumor through the market that the Bank of Japan are, you know, the Bank of Japan, on instruction from the MOF, are starting to, you know, look at things a bit more closely. It's another step up the rhetoric ladder. That can bring a move in markets as we get closer to possible intervention. Any comment on those comments, Kay or Stel?
No,
Nothing to add. No.
You mentioned everything. Old style, we are still probably 2 steps away from real interventions, but we don't know what the new guys are up to. So it's a bit funny that this cabinet secretary is so involved in the level of the Japanese yen, and that may be hinting at this Keidan Ren lobby whispering in his ears to try and force MOF's hand a little bit, but that's likely more political games than really monetary policy or currency policy directly related. But yeah, old style, still a couple of steps away from real interventions, but we don't know. They can step in at any time or just start to leave offers in the market. That is also a possibility. But yeah, it's the speed, right? If you look at it, what is it? Yesterday morning, the low 140.25, and we're 4 big figures higher today. So that's big. That's big.
Yeah, if I'm not mistaken, though, Sono is one that has commented previously on the currency. So I don't know if he's just doing that as the right arm of Kishida, but I think I've noted him speaking before more so than any other government member. But anyway, as you say, the more that start speaking, the greater the rhetoric grows, as we say. Not a lot else coming out. We've had a lot of waffle from Putin this morning, pretty much blaming the West for what's going on. Obviously, nothing's his fault. He's saying that Nord Stream won't come back online until the turbines are fixed and returned. And if that happens, it can restart tomorrow. I'm not sure what world he's living in there, because according to things I've seen, there's enough turbines there to keep everything running pretty much fully. So he's obviously just messing around. But he also did a bit of trolling by saying they're ready to launch Nord Stream 2 if necessary. Obviously, that's been a previous bum fight between Europe and Russia over getting that up and running. So him saying, yeah, we can get Nord Stream 2 up and running pretty easily is a bit of a slap to the chops for Europe there. We have got, while we're speaking here, we have got the Bank of England, Governor Bailey, Peel and Temreiro speaking in Parliament at the moment, really making an arse of things as usual, talking about inflation, what might happen to inflation with the expected UK price cap or price freeze on energy, really making a meal out of a lot of nothing. They're talking about what inflation may do on a price freeze. I'll give you a clue. That particular component of inflation will be frozen and won't go up anymore. It's not that difficult to work out, but they seem to be making complex situation there. Otherwise, it's just pretty much looking at bits and pieces of data. Yesterday's, news was really the ISM services. Now, there was a little bit of discussion and disagreement between the S&P Global, the old market number, which fell further into contraction, and the ISM, which came out pretty strong, beating expectations, higher than last month, a lot of components higher as well. So if you've got a bit of confusion there as to why there's a divergence in those, what the ISM does is it includes government service sectors as well, whereas the S&P doesn't. The S&P is just private sector firms. So that's where the big disparity comes from there, if you happen to have seen that around the news wires or whatever. So either way, the ISM is the main one. That helped the dollar and yield yesterday as well. Going to keep the Fed a bit further away from their objective of slowing demand. But, we even saw employment rising there. So, their slowing demand in employment so far isn't working too much back into expansion there. So a lot of work left to do for the Fed, and that means that we stay in this potential higher rates for longer situation, and the market is reflective of that, given also what's happening in data elsewhere. Aussie services, again, another lift up there, so another economy showing a decent amount of service sector there. GDP in the Eurozone came out this morning, came out in Australia as well, a bit better than expected, down, missed expectations, but up on last year. Most of these are all revised numbers, as you say. So the Germany industrial production not as bad as expected, but let's come down to the Eurozone numbers. Where are they? Lost them. Are they even on there? Oh, there we go. So a fairly decent revision for the Eurozone, even though it's old news. 0.8 came out versus the 0.6 priors. Year on year, 4.1 versus 3.9. Not often we get a big revision in this sort of data. If anything, it puts at least technical recession further down the calendar as far as Eurozone is concerned. Just looking ahead to today, no real big data. We've got a few Fed speakers, NBA mortgage data, the weekly numbers there. We'll keep an eye on, continue to keep a look at the market. But it's Canada that's going to be hosting the main event later on, with obviously the BOC rate announcement coming up. Another 75 expected from the Bank of Canada. Again, we're in that situation where we need to know how the path is going to progress. Are we going to see greater hikes? Are they going to pull back a little? are they going to signal where their potential terminal rate is? That's going to be the key for dollar CAD or CAD in total coming up. Boys, you got any views on the BOC later?
Good question. I think they're probably gonna. We're expecting 75, right? I think they're gonna try, same as ECB, to front load. But I do think that as the economies progress and growth or lack thereof becomes more apparent, they're gonna pare down the rate, but the rate, I mean, of tightening. But I think they're probably going to be looking to front load. So I think for pretty much all central banks now, the risk is always, even though the global situation, the geopolitical situation is really not good, the risk is always, in my opinion, for tighter, so higher tightening than expected. But I don't think they're going to do more than 75. I think they're going to do 75 and move on to the next one. So I don't think they're going to surprise the market either way. But as I said before, I think the risk for most central banks is to surprise to the upside in terms of tightening.
Yeah, Kay, you got any thoughts?
Yeah, I think that's. I was just going to say, and Scott put it on our chat. I quite agree with that. They are going to remain very close to what the US is doing, so I don't see any change in there. I'd rather look at the combination, what's going to happen between the Bank of Canada and the ECB, because I'm still pretty interested in Euro Canada. Keeping an eye on the energy levels, like oil, but also gas, because they will also deliver LNG and to Europe soon, I think. So yeah, I think they're just continuing their path and see what happens later. What I do, and what we did see from other central banks who started to raise who raised their interest rates as well, is that they're all like seemingly going a bit more data dependent than just we are front loading and we have to get there because of inflation. They seem all to be going a little bit more data dependent. So that may be a little change, but in the facts, I don't think it changes a lot. So I think Canada is going to be to remain one of the front runners and the central bank who is going to go.
Yeah. I mean, looking at it in price action terms, and I'll let you take the other CAD crosses. For dollar CAD, I think we're probably in buy the dip territory here for dollar CAD. If the Bank of Canada is going to remain hawkish as they are and on the same path, any sort of gain in dollar CAD, maybe down to that 130.80 area again. Just talking about a quick knee-jerk reaction, likely, I think, to be lifted, given that the dollar is still remaining fairly strong. And even though the Bank of Canada are in a hiking mode, you wouldn't tell that as again from the currency. The trend remains higher. So maybe that's one opportunity I'll look for later on if we get a decent knee-jerk dip. Maybe just a scale in against that 131, 130.80 level. See what's going on in the rest of the news. But we'll be covering that a bit more in the chat room, no doubt, later on. You guys got any other headlines or what you want to share, news items?
Yeah, there's two things I wanted to talk about, just to mention actually. So the first one is that overnight we had an article or a comment by the Norwegian government saying that they are open to discuss EU gas price, an EU gas price cap. There's the Prime Minister who came out with that overnight. So we have to keep an eye on that, because there's two things. Either they, or not either, but they could go into an agreement, in a longer term agreement. Of course, the prices are going to be higher than before, but in a longer term agreement with Europe to put a cap on their gas prices. And at the same time, there's still this uncertainty in Norway about what they are going to do come winter time, if they can really keep all the taps open. Now, first they said that there was a decent risk of them having to close the taps or to diminish the output to other countries. But now they're saying that they don't foresee that this is a measure that they should apply. So I think there may be a bit of an uncertainty. Norwegian kroner a bit more on the defensive, perhaps deriving from this. We will have to see how that unfolds, because I think Europe is starting to discuss this cap come Friday. The other thing of note is that, and you mentioned the Chinese yuan before, is that the trade balance in China got knocked off quite a bit. It's literally the trade surplus is 20% lower than the prior month, and that comes due to both exports and imports being down. Okay, they're still positive, the exports, but much less than they would have than expected. Of course, it's due to all those COVID cases, plants being closed, etc., etc. But yet still, the expectations were for a slowdown, but it's coming in slower than expected, and I think that has to do as well with the dollar CNH being bid. We have to look at those, as we were saying before, those PBOC fixings, and it's quite important because today is a record defensive PBOC fixing. They fixed it below 692, the dollar CNY, that is, where the model estimates were above 696, which is the biggest gap on record. So they are watching it. I think they are really trying to slow down the market before going to 7. But there's a difference between CNY and CNH. CNH being the offshore market, thus much more speculative. So I'm still of the opinion that we're actually very close now. Yeah, we came very close, but we are going to see at least a test of 7 and see what happens there.
Yep, thanks, mate. Now, before I let Kay look over the charts, I just want to speak about dollar yen, and you know, this is more to do with trading psychology and that sort of thing, because, and I'm only talking from my personal experience and my situation. You know, when you see these moves and we're up and up and up and up and up, there is always an element or part of you that wants to try and grab the top. There's nothing wrong with doing that for 2 reasons. A, if you've got a good reason to do it, for example, a good strong technical level, or you're leaning on something like a big figure, if there's barriers in place, something like that. But we're all, something I think that's been scientifically proven, we're all naturally biased to sell more than we are to buy. And so whenever you get these things, you want to sell, you want to find the top, you think, you know, maybe you're going to get a 200 pip move south or whatever. We've also got the intervention risk hanging over this. So all the reasons stacking up why we should sell something are building. And that can be dangerous, because how many times do you want to attempt trying to pick a top in something and getting knocked out? Now, conversely, on the other side, you think, okay, I'm going to buy a dip. Fine. You know, at the moment, you're not getting much of a dip in these sort of pairs, you know, 10, 15, 20 pips. So your risk reward perhaps isn't so great because purely of the volatility. So I'm finding myself in a situation, particularly with dollar yen, I don't want to buy it up here, but I'm getting less confident in selling it because I got knocked out yesterday for one reason, but we keep seeing this gaining. So what do we do as traders? You know, my view is if I have a couple of these small attempts, whatever pair, and I get knocked out, I tend to get a bit more restricted. I'll go and sit my hands. The market isn't working for me. Let the market do its thing. Maybe look for the bigger technical areas. It's why I highlighted the other day, beginning of this week, you know, big levels in dollar yen. You know, take a big wide look out at the chart, see where the massive levels are coming in, because those are areas where you might have a bit more conviction trying to trade or counter trade the trend. But I just wanted to say this because I've seen it in our chat room. I see it on Twitter. A lot of people all coming in trying to sell the tops in things and whatever. And you know, if you have 5 or 6 of those, even if they're small 20, 30, 40 pip trades, 5, 6 of those, it mounts up. So if you find you're hitting those sort of runs of losses, just put away, sit back, let the market do its thing, go onto the charts, pick the levels where you would have greater, you know, confidence in trading. So that's just a little bit of insight I wanted to give there. Obviously, if you're sitting long from 140s, then you're in dreamland. But if you're not and you're waiting to get in, again, pick your moments, but recognize the trend that you're in and recognize the risks and the volatility that's around at the moment. Kay, do you want to take that over and have a look at a couple of your pairs?
Yeah, sure, mate. I'm going to have a look at the cable to start with. It's getting very, very close to these March 2020 lows. And I think Bank of England is not really helping the fate of the sterling right now. If ever, over the course of the well, I'm not saying we have to look at it today, but keep it in mind. So we're going into ECB tomorrow, then we have the Bank of England next week and the Fed thereafter. And it's one of those things, as I've been saying, that I expect September to be a big month, and it's already happening if you look at stuff like yen or China or a couple of other things moving, cable on its lows, etc., etc. But it still has the potential to get even bigger, and I think something like the sterling and especially cable, which will depend on what the Bank of England is really doing with it. Now that we know that Truss is the new Prime Minister, that we know of her plans to spend more money, I think it's going to be up to the Bank of England to try to underpin this, but I have very, very little faith in the Bank of England's Governor Bailey to do so. So keep a very close eye on this one, this 114.10 cable going further into this month, because if we ever get below, there's a bit of a gaping hole here to even 1985 lows. I'm just saying it. I'm not saying it will happen, but keep a very close eye on it, because these are really big levels, in my opinion. So, and I'm going to call the sorry, the 114. We do have a bit of trend line activity down here, which could be seen that perhaps there is a chance to see 113 strike below and then jump a little bit like the euro did or is doing around 99. There is a possibility of going this kind of dip and then starting a rebound, but be careful on the technical side and also on the psychological side of things. And we also see that it's an extension here of the last corrective rally. If we start to go below, it's not only technical that things are going to look sour, but even on the flow front, breaking below such big levels can have the effect of setting model funds in motion. So be careful with what you do. If you try to pick bottoms, just make sure that you're putting a stop loss in place. That's basically what I really wanted to tell you here. I'm seeing a lot of people talking about sterling yen. Well, I guess we can look at any pair. Yen is probably going to be somewhere at stretched levels. We've seen this thing jumping like 500 points in line with the dollar yen, and we are, I think this zone here, 165.60, 166.10, could be a bit of a target, but it's tough to call a target in yen pairs right now, because we don't know where dollar yen really wants to end up. I've got the impression the market is, as I was saying earlier, in a test mode now, and I don't know where it's going to end because we could still have like a 200 or 300 points meltdown before a very fast move before really we see interventions, and that's going to put stuff like these crosses under severe upward pressure before having this probably pocket of air and seeing a bigger move down. It's probably coming, the big correction, but I don't dare to put a timestamp on it right here and now. Looking at those euro crosses, those yen pairs, we're successively breaking all the levels. We're now through our July high around one spike around 142.40, and we are really looking up to the 144.40, the triple top here. To be honest, the Bank of Japan for sure, but they don't have any decision-making power. But the Bank of Japan will show these kind of pictures to the MOF as well, and the MOF has their own chartist, analyst, economist, you name it. There's enough people behind the scenes in Japan, and they will know about all those levels. You can trust me on that. But what they want to know from banks is the flows, and so for the time being, we can only say that flows are selling yen. So before we see a pocket of air possibly, which will happen, why not go and retest those highs before? Another one here. Well, Aussie yen.
Just before you flick onto Aussie dollar. Kate, just speaking on possible intervention, if they hit obviously the yen and we see yen pairs dropping significantly, that doesn't necessarily mean we'll see a jump in the other majors like euro, dollar, and cable, does it? It could be that those actually get dragged lower with the intervention. Much the same the week, euro, dollar, cable rising on the back of those yen moves, rather than doing the opposite versus the dollar. Yeah, so it's not a clear cut, is it, what would happen on the intervention in terms of the majors?
Yeah, it's a very good question. As a matter of fact, it all depends what kind of intervention they're doing. If they have a joint accord or understanding without a central banks, we may see pure dollar yen selling if they would do it only themselves. If they would only have the Fed as an agreement, if the US Treasury agrees that dollar yen is going too fast, going a little bit against their interventionist rules, but if Japan can explain to them the good reasons why, we could only see dollar yen interventions, and then the rest of the dollars is probably going to be, we will have a knee-jerk reaction in things like euro, dollar, cable, Aussie, and whatever. But then, since the market doesn't really want to be short dollar yen or whatever, they will sell dollars as a reaction or correlation because dollar yen is going down. But that is going to be very short-lived because nobody really wants to be short dollars, and the dollar is only going down versus yen because of an intervention. So you have to be very, very careful if euro, dollar, cable, just to name those two, shoot up. If Bank of Japan would come into the market, I think we are going to see a pretty fierce reaction afterwards, and those pairs getting sold off again. A bit similar thing with if they would get a wider how shall I say, central bank cooperation, and add to the party ECB, for instance. So ECB are based in euros. Whatever Bank of Japan, well, they can do two things. They can call the banks and they say, like, in the name of Bank of Japan, make me a price in dollar yen, and they sell. So that would only impact dollar yen. But if it's an intervention, if it's like a more coordinated intervention, they are based in euros. So what they will do is sell euro yen. It's still going to be somewhere on behalf of the Ministry of Finance or the Bank of Japan, but they will sell euro yen. That will have an effect of euro going down initially, and then that's going to be the real trick, because they will likely, because they don't really want to sell euros, they only wanted to buy yen, they will likely call up some of their close allied banks, which in the past was typically Deutsche Bank, and they will give them the order to buy back euro dollar because they want to sterilize the euro sales. So it's depending how the interventions are done, we are going to have different and opposite effects on other pairs. The last option is that they are saying, just take for instance 145. 145 is our red line. We are going to sit on the offer, and we are going to give our agent banks in Japan orders to sell on the to go and sit on the offer in dollar yen, which would be similar to the last interventions they did around 105 and somewhere in the I think in the low 80s before we did the low in the 70s on the dollar yen. So they can just go sit on the bid, give the orders to their agent banks. No, sit on the offer, sorry, in dollar yen, give the orders. Like for instance, I'm offering $500 million yen at 145. Call me up when it's done, and then add another layer, and or they could have like a moving target, sit at 145.5, and then 146, etc., etc. So there's a fair few possibilities of how they could intervene. And depending on the way they intervene, the rest of the currencies will react around.
Cool. Thanks, mate. I'll let you get back to that chart now.
Yeah, no problem. So this one here is hanging around the prior top. That's Aussie yen. Also, it's a bit of a funny one, because despite the RBA raising rates, we have seen Aussie yen move higher, but that's only due to dollar yen. Aussie dollar is not participating in any of the RBA rate hike. Actually, on the contrary, if we look at Euro Aussie and stuff, it's rather a bit better bid. So this one, but it's a prior top, so keep this one in mind. The more interesting one for me, though, well, I mean, this one I showed yesterday, interesting. We are entering a bit of a resistance zone on the Kiwi yen. We're at this 87.10 level that I showed. Also, it's a bit of a trend line coming in from a longer. Watch also 87.37.40 prior tops. But I think the more interesting one, because we have our good friends of the Bank of Canada this afternoon, is this Canada yen. So there's two things. We have an extension here just above 110, around 110.30, but then more importantly, this bullish flag, which was also seen in dollar yen. The Canada yen has done pretty much the same. Well, a lot of yen crosses, but this one is probably interesting, just above 110.80 that comes in. And I would pay a bit of attention to this one, especially looking at what oil is doing. Oil is trying to weaken. It's bouncing this morning, but oil is clearly trying to weaken. So if we would get any more intervention rumors or the yield starting to top out, this could be an interesting one if we ever get a test up there to have a close look at. In the meantime, it's breaking like all the rest, so respect 108.15 and 107.70, this zone here. Respect it for the time being, for as long as the yen doesn't turn around. Euro CAD is going to be another interesting one with the combination of Bank of Canada and ECB tomorrow. This one, 33 quarters up to 80, 75, 80 is a bit of a crossroad there on in the shorter term for this Euro Canada. Could be the neckline of a possible head and shoulders lower. Of course, the bigger picture hasn't changed, but I'm just looking at this because of Bank of Canada and the ECB combination tomorrow. So we have this 133 quarters 80, then the 131, the figure. If that would go, it is possible that we are going to have a look back at these tops a bit higher, but the combination of both can be a big enough driver to me to either go have another big figure and a half, perhaps even higher, coming back into this trend line. But if Bank of Canada presses on and ECB would show the slightest of weaknesses, in my opinion, over the next couple of days, this thing is going to crack those prior lows. That's what I'm thinking. The rest, yeah, I'm going to keep it short. Today we showed the Euro Canada, showed the Canada yen. Dollar mix is interesting here. We did a bit of a retest of this trend line earlier, but we're struggling to get over 2020, 2022. I think this is needed to for a move higher. But as I've been saying already a couple of times, the proximity of Canada and Mexico to the US makes it, to me, at least a bit more interesting to trade crosses than rather the dollar pairs. And then on last one on the euro. No, I have to show the CNH as well. This one I'm looking, and I was hoping pre-ECB to see a retest of those levels as we've seen last week. But I'm afraid we are not even going to get there before ECB, because it's refusing to retake 20 ahead of the ECB right now, this euro mix. Dollar China, as we know, I've been showing this one 70080. I think is a level 78.6 of the big 2020-2022 decline. This is an important one. I'm keeping an eye on it. I've actually got my take profit in there, and I'm trying to figure out whether to just take it out and let things run a bit. But okay, I mean, it's in anyway in very interesting levels, and we have to pay attention to it and listen to what the PBOC has to tell us for this one. And then last couple of things, gold in this kind of downsloping wedge, hanging around 1700, waiting for clues on the yield front, in my opinion. We have seen the economic data not really disappointing too much. Okay, we have seen a mix of data, that is for sure. But then the ISM is holding up, and I think that is what's going ultimately make silver more interesting to own, if one wants to own it, than gold. Because if the economic data hold up, this one being an industrial metal, more than an inflation fighting or yield play, gold is also a very big yield play. But if economic data hold up, this one should be more interesting. So we had another flush under this trend line, but we are back above 1820 right now. So this is one to keep an eye on. We are going to need moves. Well, 1840, I don't know why this disappeared, probably because I'm on the daily. 1840 is a bit of a level, but then I think we really need to get back above 1870 to get going. I know it's one of Stel's plays as well, and I fully agree on this one with Stelios. And with that, Ryan, I give it back to you.
Thank you very much, mate.
Stelios, are you still around?
I am, yes.
Yeah. So I mean, are you kind of agreeing on this silver?
I am. You know me, guys. I went long a little bit already now. 1823 average. I'm not completely convinced. I mean, in the long, as a medium-term trade, I love it, absolutely love it.
Yeah.
I still think the market might try to push gold below 1680, just for the flush, and that's going to take silver low. That's why I'm waiting and I'm not going full size in. But as I've said so many times, excuse me, silver in the low 18s or high 17s. I mean, we're going to be looking at these prices in a couple of years' time. We're going to be laughing. So I just can't allow myself not to be long. And the way I trade these things is no leverage, and gold I trade physical, silver I don't. And I have a very high tolerance in terms of drawdowns. And I'm not suggesting people do the same. That's how I've been doing it, and I don't do it often, right? Last time I did it was 2018. It took about 2 years for it to perform, but man, did it perform! And now I think the time is right again. So I'm patient enough to wait for a couple of years if needed. But if when the move comes, you annualize it, it's still a very, very nice move.
Yeah, I agree with you, and this is what I'm keeping a very close eye on, and people in the room will know how I'm positioned in it as well. I'm a little bit of a shorter term player, but I do have a very long term leftover as well, and I agree that sooner or later it's going to take off again, and then I'm going to call the Reddit community to put it back up at.
I just want to answer to our friend Dale, who says, Stella, I respect you a lot, but I've been shorting the last 3 days at 40, yesterday 20 this morning. I'm not disagreeing with you. We're trading a completely different thing, right? You're trading short term. I'm trading with a much longer horizon. So you could make money. I could make money. We could both make money depending on your leverage, on your time frame, on everything. So good luck to you, and we see how it goes.
See you at the bar.
Yeah,
see you at the bar. Yeah.
It's always important to understand that fact. People trade over different timelines, and both can be right, both can be wrong, just on different timelines. It's the beauty of trading. Just because you have an opposite opinion to someone doesn't mean you can't both make money. So best of luck to the pair of you.
Oh, I know who you are now, Dale. Okay. Yeah. Okay. I got it. I know him.
Yeah. Cool. one of your fans, eh?
No, I like him. I don't think he's a fan, but we communicate. Yeah.
Cool. Okay. Well, then he's a big fan. There you go.
Okay. Nice.
Anne was asking about the S&P. I've personally got no view myself here. I'm still a bit confuddled as to the moves. We go up on bad US data, down on good US data. It's all asked about face for me still here. I think maybe we're going to start seeing real fundamentals affecting stocks. If the US is going to head for this soft landing, crash landing, however you want to call it, that's going to be, I think that might start weighing on equities over the Fed easing, tightening discussion that seems to obviously go on in stocks here. Technically, we're still pretty much playing big figuritis here. We can't get a hold below 39, can't get a hold above 40. The next level into that old fib there, the 38.2, 38s, is potentially going to be another, I wouldn't call it a watershed moment, but it's going to be an important moment. If it cracks that, then we're going to be heading south. And as a lot of people have mentioned in the chat room, is that going to get the Fed looking at markets and seeing how much damage they're doing, and will that cause them to ease up on policy, or will they just continue be damned? I think that's going to be driving stocks moving forward. The trend is pretty clear. Rally sell at the moment. You're going to need to break and hold above 44,000, and then get above that 40, 70, 41 area to look like it's going to turn this current trend around. Roughly what 3-week trend we're looking at there. So I see no reason why that should break right now, given everything that's going on. But if you want to see it break, look for a hold above 4,000 in the first instance. That'll get some conviction for buyers to take it a bit higher. Conversely, have a look, see what happens into that 38 fib and the 38 handle. If we hold there, potentially we might see a bottom put in place. So that's my quick view on that one. I did want to touch on gold as well, because I keep looking at this, keeping half an eye on it, because I'm getting very interested in this 1680 level. It stands out for itself there, the strength of that level. I'll call this a test. I think we got to 92 or something, maybe a bit lower. Where did we get to? I think I can't have a look. Where were we there? Oh, where are we going? We got to 80 there. So we're looking at 75s, 80s. I missed that one while I was off, or rather some weeks ago. This latest one we got down, as I say, to 90s, 92s. Pretty much going to call that a test and hold of that area. Probably we've got buyers sitting in here that we're protecting that low again, but it is a big level and we seem to be coming back to it fairly swiftly. Still would be potentially good for longs, but I'm thinking more about looking at a break trade if it does head below there, because when I get these big strong levels, you know, multi-month levels, the breaks can tend to be really quite volatile. So I'm thinking about potentially looking at a break trade on that one, but those that are long and playing off that level, there still may be some good value in there, but watch carefully if you do get a break below. As for everything else, euro dollar has been spoken about, you know, really around this 99 area. It's waffling about now. I'm done with trying to trade the 99 area for now. I think the ECB orbit is what's keeping this sucked around. I do have the feeling that either way on the ECB, we're either going to be trading at parity or above after the ECB, or we're going to be down at 98. I don't think we're going to be sitting here at 99 after the ECB, because either way the market's going to make a decision, make a move. I would perhaps favour the downside over the upside based on prior ECB history of not being super hawkish. I think the greater risk is that they disappoint markets, and that's going to do for the euro around this 99 area. But anyway, we can talk about that tomorrow on ECB day. Guys and girls, I wish you luck today in your trading. Stay safe among these moves, particularly if you're trading the yen. Don't want to hear about any horror stories. But also, you know, have a think about it. Let us know tomorrow. I want to get a bit more of your input into this. We're getting a few questions and a few items you want to talk about, but you know, come on, I want to hear from you guys and girls. I want to know what you're getting into on anything, trading, psychology, whatever you want to do, prices. I want your interaction. I don't want it just to be me, Stel, and Kay babbling on all day long. As much as I love them, you know, they talk the hind legs off a donkey. But anyway, yeah, give us your input. Thank you very much for coming to the Flow Show. Enjoy your day, and we shall see you tomorrow.
Bye-bye, everybody.
Cheers, guys. Have a good day.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.